I'm Elisa Parenti in Washington, and you're watching Bloomberg Technology. Here's a check of your first word news. President Trump met with the nation's governors today, telling them the time for discussing what to do about school shootings is over.
We don't have any action. It happens. A week goes by. Let's keep talking. Another week goes by. We keep talking. 2 months go by. All of a sudden, everybody's off to the next subject. Then when it happens again, everybody's angry, and let's start talking again. We gotta stop. By the way, bump stocks, we're writing that out. I'm writing that out myself. I don't care if Congress does it or not.
Supreme Court justices turned away an appeal aimed at ending deportation protections for young, undocumented immigrants. The ruling is a temporary reprieve for so-called dreamers while Congress tries to work out a political solution. Israeli Prime Minister Benjamin Netanyahu plans to visit the U.S. this week for talks on Jerusalem and on Iran. He plans to personally thank President Trump for his proposal to move the U.S. Embassy to Jerusalem. Hundreds of people came to pay their respects to the late Reverend Billy Graham in his hometown of Charlotte, North Carolina. He will also lie in honor Wednesday and Thursday at the U.S. Capitol. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Elisa Parenti. This is Bloomberg, and Bloomberg Technology is next.
I'm Emily Chang, and this is Bloomberg Technology. Coming up, the heavyweights take center stage in the fight for smartphone supremacy. We weigh in on the upcoming battle between the iPhone 10 and Samsung's Galaxy S9. Plus, Facebook insight on how Trump's ads game helped him win the White House, why one writer believes the Trump team and its mastery over analytics won him the election. And a Bloomberg scoop, Alibaba adds to its arsenal and puts Tencent in its crosshairs. We'll examine the e-commerce giant's decision to go all in on China's top takeout app. But first, to our lead, the battle of the smartphone. Samsung has come out with its response to Apple's iPhone 10. The Galaxy S9 has augmented reality emojis, camera upgrades, and stereo speakers. The company unveiled the newest handset at Mobile World Congress in Barcelona, Spain. Off the heels of this announcement, Bloomberg is reporting that Apple is preparing to release a trio of new smartphones later this year, the largest iPhone ever, an upgraded handset the same size as the iPhone 10, and a less expensive model with some key features. According to people familiar with the matter, Apple is already running production tests with suppliers. An official announcement is expected this fall. Bloomberg Tech's Mark Gerben broke this story. He joins me now. So, Mark, what do we know?
I think we know a lot. We know that Apple's working on 3 new phones once again for this year. The big story here is the bigger phone. It's a 6.5-inch phone. It's going to be the biggest smartphone Apple's done. And it's also going to be the largest mainstream smartphone on the market, even topping the Note 8 from Samsung that has a 6.3-inch screen. There's also going to be an update to the iPhone 10 design, the current screen size, plus a new, cheaper model with many of the features that people like in the iPhone 10.
So how will this compare to the 8 and 8 Plus? Are those?
Yeah, so if you look at Apple's strategy right now, they have this high-end phone, the iPhone 10, right? And then they have the 2 low-end phones, the iPhone 8 and the iPhone 8 Plus. But the problem is the 8 and 8 Plus, while they're new and have some of the newer tech inside, outside, which is what many consumers care about, is extremely outdated. Those designs are the same ones pretty much that came out in 2014. So this will alleviate that. The cheaper price, but with Face ID, the edge-to-edge screen, a lot of the new outward-facing flashy features.
Why do they think we want a bigger phone?
You know, that's a good question. One, it really appeals to markets in Asia where there are a lot of consumers who are mostly single device users. And what that means are people who have only one piece of technology in their life. They watch TV from it, they do their email from it, they do their homework from it. People who do everything on one device versus some other people, they spread their workflow. Maybe me, I know you do the same across a laptop, a phone, a tablet,
Absolutely.
a TV. So this is really appealing to those people, especially business users as well.
So what will competition be like between the two two phones.
Yeah, so let's move to the Samsung S9 now, because that really, intros that question. The S9, not a big update from the S8. It's sort of a, a mid-cycle, refresh to the phone. And why that is, I think, is because Samsung is holding its fire. They're holding its fire for this fall when they're going to come out with whatever they choose to call it, the Galaxy 10, the Galaxy X, basically the true successor to the Samsung Galaxy S line. And the big feature there is going to be this flexible, foldable, really high-tech digital screen, which is really going to be a new, unprecedented step for the industry. So Apple, in the fall, with this new big phone, is going to be going toe-to-toe with that. And so I think seeing the Apple-Samsung war this fall is going to be a really significant moment to watch.
You'll often hear Tim Cook and Apple talk about getting new users from the Android platform. How many users do we know are actually switching platforms, whether it's from Android to iPhone or vice versa?
It was very interesting because Tim Cook actually dodged that question on the last earnings call. Typically, they like to tout those numbers. I don't know if we should read into it too much, but maybe it means that the switching wasn't as frequent as they would have expected, or maybe they just, like they said, didn't have the data in yet. So we don't actually have up-to-date data on that. But what we do know is that this bigger phone, the 6.5-inch phone, is going to appeal to Android users who are sort of on the Note 8 bandwagon. They want a screen with more than 6 inches of real estate. The lower cost model will also be bringing down the high tech to a lower price. So that also could be appealing to Android switchers.
Now, when it comes to the current iPhones, the 10, the 8, the 8 Plus, what do we know about the mix, and how do we expect that mix to evolve?
So we can glean a lot from their past earnings results from earlier in the month. The iPhone ASP is north now of $700, which is an all-time record because of the $1,000 starting price point of the iPhone 10. But we also know that unit sales overall came in at around 77.3 million units, which was below analyst expectations of 80.2 million units. So that means even though the ASP was higher, the unit sales were lower than expected, actually 1% lower year over year than what Apple sold last year, which indicates to me that the people are really interested in the iPhone 10's high-tech features, but some people can't afford it, and so they're left with the cheaper one, which they don't want. So coming out with a lower cost model around the same price, $700, $600, as the iPhone 8 and the iPhone 7 with the new technology, I think that's going to be a really big boon for Apple.
All right, Mark Gurman, our Bloomberg Tech reporter who covers Apple. As always, thanks, Mark. All right, some breaking news. Glassdoor, the employment website operator, is interviewing banks to advise on an initial public offering that could come as soon as this year. A 2016 funding round valued Glassdoor at more than $1 billion. We're going to have a lot more coming up, including with our IPO reporter, Alex Barinka. All right, if you like Bloomberg News, check us out on the radio. Listen on the Bloomberg Radio app, Bloomberg.com, and in the U.S. on Sirius XM. This is Bloomberg. All right, we just broke that headline that jobs website Glassdoor is preparing for an IPO. I want to get straight to our Bloomberg News reporter, Alex Barinka, who covers deals for us. Alex, what do we know?
That's right. Glassdoor is interviewing bankers to help advise it on an initial public offering. This is all according to people familiar with the matter. The online job company is looking to list in the second half of this year. That could still change, but it is a concerted step forward from a company that's frankly been on my watch list since they raised money a couple years ago, giving it a valuation of almost $1 billion. And this listing would come on the heels of what we've seen as kind of a rush of companies getting out toward the public markets. Dropbox just filed last Friday, so it could be a good indication that we have some more like Glassdoor to come.
Glassdoor has been taking on some new executives. Alex, what do we know about the business model and how well the business is actually doing?
The business is going strong right now. From what we hear, revenue is growing at about a 30% clip, which is what investors typically like to see out of these companies. Anything less than that is seen kind of as a bad sign. Glassdoor did also just bring in James Cox, the chief financial officer who used to work over at Advent Software. So they've been kind of bolstering their ranks. In addition to the CFO, they brought in a new COO, a new comms person. So it does seem like there's a lot of good momentum here from this company. Another internet company that I will flag that our sources told us today could be a good candidate for 2018 or 2019 is SurveyMonkey. It's another company whose financials have been improving. So whether it's Drop, Spotify listing, SurveyMonkey, or a Glassdoor, it seems like we'll continue to be busy for new tech companies getting out to the public markets.
All right, Bloomberg Tech's Alex Barinka. Alex, thank you so much for that update. We'll be watching. Well, just how influential were the Russians in getting Donald Trump elected? And what about Facebook itself? These are questions that continue to plague the social media giant and the minds of U.S. voters. Now, a former Facebook employee says Trump's own mastery of the Facebook ad platform may have had the greatest influence of all. Writing in Wired magazine, plotting Russians make for a good story, and external enemies frequently serve an internal purpose. But the trail of blame often leads much closer to home. It's right there, topped by a big blue bar on our smartphone screens, and could very well be how you arrived at what you're reading right now. To explain, I want to bring in the author of that piece, Antonio Garcia Martinez, contributing writer at Wired, also a former product manager for Facebook, worked on the ads team, and the author of Chaos Monkeys, Obscene Fortune and Random Failure in Silicon Valley. Great to have you here on the show.
Having me.
So explain what you mean by that.
Well, I mean, I wrote this piece precisely because there was so much fanfare about the Russia thing, and I knew as a marketer that Trump's use of Facebook ads, specifically some of the products I had worked on, is really how he won the election. So that's what effectively is what my piece is about.
There was a lot of conversation about this over the weekend, and basically the bottom line is that Hillary Clinton had to pay a lot more for ad space than Donald Trump did, correct?
At the end of the day, that's exactly right. And I get into exactly how that happened, but yeah, that's the story.
Trump's digital campaign advisor was also tweeting over the weekend saying, I bet we were 100 times to 200 times her. We had CPMs that were pennies in some cases. This is why Trump was a perfect candidate for Facebook.
That's right.
The bottom line is that Facebook gives you more ad space or cheaper ads if they think your ads are going to be more engaging.
Right, and by engaging we mean basically clickbait, like bait, comment bait, whatever suits the sort of action that it's optimizing for, you effectively get cheaper media for driving that sort of engagement.
So why would Trump ads be more engaging?
Well, if you believe that the political rhetoric from his party is a sort that engages people in a very excitable and indignant way, that would spread easier on the actual ad system.
Do you think it's okay for Hillary Clinton to pay more for ads than Donald Trump?
And that's a great question. There's a lot of election law, and I'm not a campaign lawyer, but in general, that is a problem legally. You know, there's equal time rules on TV. There's questions of in-kind donations by certain networks to certain candidates. It's strange. It's weird. I mean, here's the reality. The Facebook ad system was designed to sell you a pair of shoes or a sweater. It wasn't designed to elect the president of the United States.
Right, but that changed a long time ago.
Not as long as you might think. I was the targeting PM in 2012 in the last election, and frankly, politics was not really a priority at all at the time.
So the big question is, what is the responsibility that Facebook bears here?
That's a good question. Yeah, I mean, I think to the extent that only one side exploits Facebook, it does seem deeply unfair. I think following this election, I think both sides will pay a lot more attention to Facebook going forward.
You explore some of the ethics of this in your book, and you allude to it in your piece. How much were conversations about ethics part of what you talked about at Facebook? I mean, does this come up on the minds of ad product managers? Oh,
it absolutely does. I mean, probably 10% of my time there was spent with lawyers, wondering about privacy ethics and law. And the weird thing is, in the U.S., there actually isn't a lot of regulation around it. So it basically comes down to industry practice, which is something we made up as we went along, effectively.
So, what do you imagine is happening inside Facebook right now?
Oh, I'm sure they're thinking deeply about this. I mean, on the one hand, they're shutting down the Russia thing, right? The whole, ad filtering and ad policing is going to be a lot more aggressive going forward than it is now. You won't be able to just enter a credit card in Russia, pay in rubles with a Russian IP address, and just target swing state voters in Ohio. I'm pretty sure that's not going to be the case going forward. I think some of the bigger questions are, how does the ad system change to not necessarily preference or prefer engaging content, and also on the organic side, right? A lot of the Russian efforts were not paid. It wasn't ads, actually. It was just spreading memes. How do you actually shut down those memes? That's a much, much harder problem, I think, for Facebook.
That's exactly what Rob Goldman was trying to point out in his tweets, which the president then retweeted. But, don't you think Facebook's trying to shirk some of their responsibility here?
Yeah, I think that's right. I think broadly in the media space, you're seeing the death of editorship, right? Someone telling you need to read this thing because it's important, and it becomes an algorithmic popularity contest, which is what I called it. That's what democracy has become. And the like button is the new ballot box in a way. So will Facebook actually embrace that responsibility? I'm not sure. I think they really don't want it, to be honest.
But they have it already, is the point.
That's exactly the thing. They have a job they don't want. That's right. That's exactly right.
So another line from your piece. We've all contributed to this political balkanization of self-sorting or being sorted by Facebook into online tribes that get morphed into filter bubbles, which are then studiously colonized by commercial means.
Right.
How much responsibility do you think Facebook bears for the election of Donald Trump?
I think it was one part of the puzzle, but I don't think it's everything that ails us right now as a body politic, right?
Which leads to my next question. How much responsibility does Facebook bear for the divisiveness of our country?
It's the megaphone on the yelling. I think it does bear some responsibility.
So if there is some responsibility there, then how does Facebook grapple with that? What does Facebook change in order to rise to that responsibility?
I mean, long term, if you're asking me to guess what's going to happen going forward, I think political ads will be regulated very differently on Facebook and will exist completely separately from all our other ads. This business of Hillary paying more than Trump for the same ad is probably not going to happen going forward. And they have to pull that completely out of the ads auction, which is the key thing. That might be one of the things.
So you do see regulation coming?
Or potentially self-regulation. But effectively, the way things are done now will not be the case going forward.
That's interesting, given that people in power benefit from the way things are right now.
Right. This would be calling the current administration to actually regulate the practices that put itself in power. That's right.
Does Twitter, you also, Twitter bought one of your companies.
That's right. Yeah.
Does Twitter have a comparable problem in ad targeting?
They have a similar product. It's called tailored audiences instead of custom audiences. It sounds very artisanal. But yeah, it's to the extent they use that, they would have the same issue.
So, we can imagine that a Hillary Clinton campaign would probably pay more for the same amount of real estate than a Donald Trump campaign?
I'm not deeply familiar with their ad system. I can't venture a guess. But this sort of paradigm of judging bids by engagement is very common. Actually, Google came up with it, was the sort of big first player to do it. Facebook did not invent this at all. This is actually industry practice in many ways. Yeah.
So rather than answering what will happen, because we don't know for sure, but what do you think Facebook should do differently?
Well, I think, the policing of ads, right? Just last week, they announced they're going to send little postcards to people on their address of their political advertiser to make sure that's actually what their address actually is. And they're actually in Columbus, Ohio, and not St. Petersburg. So that's one step. I think they're going to crank down, again, like I said, on those advertisers a lot. So it's going to be a big deal to run political ads on Facebook. You're going to need basically a license to do it. And then secondly, I think is the other thing. They're probably going to set aside inventory for various campaigns and just say, look, you're going to pay the same amount for the same people in the same swing states, and just like TV does, by the way, and sets aside whatever it is, 5-10% of the inventory, and says, this is what goes to this campaign, this is what goes to this campaign, and that's it.
Mark Zuckerberg has said they're going to start showing more status updates from friends and family rather than news. I got asked this question. I didn't know quite how to answer it. But do you think the intentions of Facebook are good? The people who run Facebook are good?
Yeah, I've said it before. Like this whole business of a more open and connected world, they actually believe that. The question is that sometimes they either frame that or don't see the the negative consequences of what they do. Again, at the time, we were thinking of having a company like Bed Bath & Beyond sell you bath towels, not, Trump win the White House. And I think it's a little bit difficult to envision that when you're kind of intoxicated inside the somewhat cult-like culture of the company and just trying to push that ball forward without imagining the negative consequences of what you did. I mean, if you had told me in 2012 that the products we were building would be used by Kremlin agents potentially to subvert American democracy, I would have laughed in your face, right? And yet, here we are, it's 2018.
Nobody's laughing now.
Right.
All right, Antonio Garcia Martinez, Wired contributor, author of Chaos Monkeys, and a former Facebook employee. Thank you so much.
Thank you.
Antonio, great to have you on the show. Coming up, Deutsche Telekom says its investment in the UK's BT has been a headache because of Brexit, but the company's convinced things are looking up. That interview from Mobile World Congress in Barcelona coming up next. This is Bloomberg. 100,000 people have descended on Barcelona for Mobile World Congress. Bloomberg's Caroline Hyde spoke with Deutsche Telekom CEO Tim Hodges, who says BT has a recipe for success and will recover. He said the investment has been a headache for the company due to Brexit, and the pound's depreciation and tough regulatory environment have also had an impact. Take a listen.
Deutsche Telekom is the biggest European telecommunication operator, and we are with 11 markets in Europe, and we have now intra-market consolidation. We are driving, for instance, in Austria, the consolidation with UPC, where we bring mobile and fixed line together. We're working on a consolidation in the Netherlands, where we bring two mobile operators together. So this is, let's say, happening in Europe. There's nothing happening cross-border M&A at that point in time. We are much focusing on strengthening our position within the markets. And then we have the US, which is a new position as well. You know, we are growing double digits in 19 quarters now in a row. And in this area, no M&A at that point planned, but more the organic growth for all the new areas which we are building with our infrastructure.
What about stopping M&A on your home turf? What about Liberty Global assets being eyed by Vodafone? You don't like it. Are the regulators listening?
I think it's totally unacceptable, this kind of deal, because it's creating a new monopoly. It's dominating in the TV markets. It's going to dominating in the housing associations where they have a certain legal privilege. And it's going to be, let's say, even a domination in the cable infrastructure, while these guys are unregulated. Deutsche Telekom in the fixed line still fully regulated. I think that's totally unfair in the competition, and I'm asking for fair competition.
But the analysts think the deal is going to go through. How do you fend off the competition?
Look, it's too early to say. There's even no deal at that point in time. But I just want to claim that, if this deal is going to happen, we have to see a total different landscape. I think it's anyhow not approvable from what I see from the past of this cable network in Germany. But anyway, we will see when the deal is coming and what the authorities then might decide.
What about the US? You were talking about the fact that there's no deal there. You didn't get Sprint. What's the future for the United States? Because growth is slowing for T-Mobile US.
Look, we have invented a totally negative perceived industry in a new way. Magenta Telecom has created the Un-carrier proposition, and since 19 quarters in a row, we've grown with more than 1 million customers.
But the growth is slowing.
No. But look, the only one who is gaining growth is us. And we have a balance of new customer growth and our profits and free cash flow that we are able to invest. Last year, we bought more than 30% of the 600 megahertz spectrum. What is that? More? We need that for, getting deep coverage across the country. And we are now opening a lot of areas. We had 230 million pops covered. Now we're going to 330 million already. And this is a new area of big growth for T-Mobile in the US and the team around John Ledger and Mike Siebert.
You're going to buy more spectrum there?
No, I think, now it's a break. There will be 5G spectrum coming at one point in time for the new applications which we are planning, but we have plenty of spectrum which we have to deploy at that point in time. And we are growing now organically in the market with our customers.
Tell me about my hometown. Tell me about the UK. You've got investments in BT. Brexit, still a headache?
Look, it has been a headache, to be honest and straight, because, we have brought the EE business into BT and got shares in exchange to that one. Due to the Brexit decision, due to the pound-euro relation, and due to the tough regulation environment, we were facing in the UK, we lost some value on that one and depreciated that. But what I see in BT, what they are doing, how they're attacking the market, the convergence, mobile and fixed line, bringing it together, the good portfolio of content on top of that. I think this is a recipe for success, and I'm convinced, we're going to see, big recovery on our stock in the UK.
That was Deutsche Telekom CEO Tim Hodges with Bloomberg's Caroline Hyde. Coming up, just how do you spend $100 billion? We'll talk to the man who runs the world's largest tech investment fund, the Softbank Vision Fund. Next, this is Bloomberg.
I'm Elisa Parenti in Washington, and you're watching Bloomberg Technology. Here's a check of your first word news. The Florida House is expected to subpoena records from Broward County Sheriff Scott Israel and other agencies that interacted with high school shooting suspect Nicholas Cruz. A House committee recommended that the full House initiate a formal investigation into how government agencies dealt with Cruz and how law enforcement responded to the shooting. The UK Labour Party's post-Brexit vision could set the stage for a showdown with Theresa May. Opposition leader Jeremy Corbyn delivered a keynote speech in Coventry, England today.
Labour would seek to negotiate a new, comprehensive UK-EU customs union to ensure there are no tariffs with Europe and to help avoid any need whatsoever for a hard border in Northern Ireland.
May has ruled out a customs union with the EU, which puts her at odds with the business community. China's Communist Party is set to repeal the ban on presidents serving more than 2 consecutive terms. It removes the only formal barrier to President Xi staying in office indefinitely and completes China's departure from a system of collective leadership. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Elisa Parenti. This is Bloomberg. Just after 5:30 p.m. here in Washington, 6:30 Tuesday morning in Hong Kong, where we are joined by Bloomberg's Sophie Kamarudin with a look at the markets. Sophie, lots of green arrows here in the States today. Big rally.
Yeah, hopefully we'll take those green arrows and run with them, because after a bullish start to the week, Asian stocks perhaps could end February on a more upbeat note, as we have bonds and the dollar looking steady ahead of Jay Powell's appearances later this week. And we do have markets still digesting China's moves to remove presidential term limits, which on one hand provides political certainty, but on the other raises the risk of policy errors with the absence of checks and balances. And we're going to be watching to see if that buoyant mood in Chinese markets continues this Tuesday, especially after early indicators show that the solid start to 2018 for the Chinese economy remains intact despite distortions from the Lunar New Year holiday. And we are light on the data front today. Futures in Japan and Australia pointing higher. Also, a key focus will be on Korea, where the central bank is expected to hold rates at Governor Lee's last scheduled meeting. And we're going to be watching Apple suppliers and rivals there on the radar after reports that the tech giant is preparing the release of 3 new smartphones later this year. In Hong Kong, I'm Sophie Kamarudin. Up next, more with Bloomberg Technology.
This is Bloomberg Technology. I'm Emily Chang. Well, when it comes to tech investment funds, Softbank's Vision Fund reigns supreme. With $100 billion in its coffers, the fund has invested in Uber, Didi, WeWork, and much more. And they're not stopping there. Vision Fund CEO Rajiv Misra spoke with Bloomberg's Caroline Hyde at Mobile World Congress in Barcelona about what comes next and hitting that $100 billion commitment in spending.
The method is simple. It's not about just the industry. The method is the entrepreneur first, their vision, their passion, their ability to grow. They not just grow in terms of revenues, but they're able to recruit, have the bandwidth to go out globally and hire senior management, build an organization, and have belief that they can do it, because that's where we push on. Hey, you want our capital, how will you create exponential growth using that capital? And that's one. Second, they have to be market leaders in whatever they do. They can't be number 2 in the segment they are in, because going from number 2 to overtaking the market leader takes a lot more effort than just growing from number 1.
Market share, market leader in a country or globally? Because
in a country. And the third objective, obviously, is that they're truly disruptive. And there's a consumer need for them. Whether it's Auto One, there's a consumer need to sell used cars for people living in smaller towns or even living in a larger town where they can get a better price and price discovery. Or whether it's Katera with cheaper homes, Compass with the ability to kind of have an online real estate broker sell your home faster with less hassle for a better price, etc., etc.
you have $100 billion eventually to put to work. When does the close occur?
Sometime this summer.
And when you have $100 billion, you have the rest of the eyes of the VC community on you. You're worrying about valuations perhaps being pumped up. Is that a cause for concern, do you think?
No, it'll be good for them if the valuations go up because they can exit at those prices. And a lot of the early investors have exited, predominantly have exited with our investment, because we do both primary and secondary, buy out secondary shares, including in Uber, in Didi, in WeWork, where early investors exited and sold secondary shares to the Vision Fund.
You mentioned Uber, Didi, companies in the same space. Ride sharing, how does that work when you've got competitors? Where do you see the vision for that?
Well, A, they're not competitors because Didi is in China. Uber is the rest of the world. There'll be a little bit of overlap, but I believe it's quite synergistic. because at some point there's R&D to be shared, and the benefits are immense having 30 companies in your portfolio growing to 70, 80 companies over the next few years.
Will you merge them?
May not be merged, but they definitely can be joint ventures. An Auto One selling used cars to Uber drivers, a insurance company like a Lemonade selling car insurance to Uber drivers, etc., etc.
Where does insurance go? You're eyeing up insurance at the moment. Is that where Swiss Re fits in, for example?
It's early days. No.
And what about the expansion into other areas? Where are you not seeing enough of in terms of deals? Do you want to see more in the banking sector? Do you want to see more from a geographical perspective?
I think we're seeing enough deals. Our ability to process them is important. We've been in existence 9 months. We've made 30 investments, so we are seeing enough deals. I think we could only desire would be to see more from Europe. We have made substantial investments in the US, which is our #1 destination. We have made a few investments in China, in India. We'd like to see more from Europe.
What about the responsibility of technology? Because you sit on the board of Uber now, for example. These companies obviously need to have ethics that suit the way in which you want to envisage the world, but where do you see the responsibility of Vision Fund guiding these sorts of portfolio companies that you have?
We don't get actively involved with management. If we believe in the CEO and the management, and we believe that they are responsible, we'll keep an eye on them. But we take Uber. Dara is an amazing CEO. He's doing a great job, and he'll continue doing so. Cheng Wei in China, because to be successful as a company, it's not a short-term goal. It's about over the next 10 years. And at the end of the day, the consumer should want to use you and relate to the brand as a good brand. Whether it's Auto One, whether it's WeWork, or Didi, or Oyo Rooms. I don't think it runs counter, because the brand has to be seen as a responsible brand.
10 years, you say. What is your timeline when it comes to these sorts of portfolio companies?
There is no timeline. Life of a fund is 12 years, which is a long time. We'll stay invested as long as they keep growing. If they're growing at 30, 40, 50% their top line and their bottom line, we'll stay invested. When we believe that they're mature organizations and the returns are not going to grow as much, and we'll exit to other shareholders who want kind of risk-adjusted returns that are lower. Our return hurdles are higher, so we don't invest in a company with a 5-year horizon or a 7-year horizon or a 10-year horizon. We invest in companies for their growth. If they stop growing, we'll exit.
That was Softbank Vision Fund CEO Rajiv Misra speaking to Bloomberg's Caroline Hyde at Mobile World Congress in Barcelona. Caroline also caught up with Scott Huffman, Vice President of Google's Assistant. She started the conversation by asking whether Google is going global with its Assistant. Take a listen.
We're excited because by the end of this year, we'll be available on 30 languages. It covers about 95% of Android users around the world. So really trying to cover the whole world with the Google Assistant.
And how much are you therefore having to reinvest and put yet more money and time and effort into improving how intelligent artificial intelligence is?
Well, building the assistant for all these different languages is a huge investment, and luckily we have, we think, some of the world's best machine learning capabilities around some of the core components, things like speech recognition, language understanding dialogue and conversation, and so we're really putting all of those machine learning engines to work to extend the assistant across all the different languages.
How integral is it to the Google as a whole? Because of course this is not just a voice assistant. This is, as we say, artificial intelligence, and this is something that must really work across so much of the business.
Yeah, it's been really exciting because the assistant is really a unifying kind of thing across Google. On one side, it's really bringing together our deep investments in AI over the years and giving them kind of a single place to be shown. And on the other side, allowing users to have a simple conversation with Google to tap into all the different services that Google provides. So, of course, Google Search and all the answers that we have, but also things like Google Maps, where I can use the assistant to navigate, Google Photos, I can say to the assistant, show me photos of my daughter riding a horse, and they come right up, and a lot of our other services are really available through that simple voice interface.
Caroline Hyde there at Mobile World Congress with Scott Huffman of Google. Now to a stock we are watching. Fitbit is falling in aftermarket trading. The wearable devices manufacturer dropped by as much as 14% after reporting revenue in its crucial holiday quarter of $571 million. That compares with analysts' average estimate of $588 million. Fitbit stock is now trading at about a quarter of its IPO price amid increasing competition from Apple's high-end smartwatch and other cheaper rivals like Xiaomi. Coming up, we all know Silicon Valley has a diversity problem, but how do we fix it? We'll talk to one company about their approach coming up. This is Bloomberg. Weeks, we've been looking at gender bias and issues in Silicon Valley and what can be done to bridge that gap. But tech's gender problem and diversity problem goes well beyond the treatment or mistreatment of women. The numbers when it comes to racial diversity are even more appalling, unfortunately. Just look at how some of the biggest names in tech compare with the national averages when it comes to the breakdown in hiring minorities. They exceed the numbers when it comes to hiring Asians, but the numbers fall well behind when it comes to hiring blacks and Latinos. So just what can be done to change this? My next guest has an idea. Treehouse, an online education platform that's used by 280,000 students and companies worldwide, has launched a new program called Talent Path to try to help companies create a more diverse engineering team. It is backed by some big names from Silicon Valley. Joining us now, Ryan Carson, the CEO of Treehouse. So, Ryan, first of all, what is it about Talent Path that's different from what anyone else is doing out there?
So Talent Path directly connects people of color and women to tech companies by going through organizations like the Boys and Girls Club because they have the trust of those communities, and then that way they're able to enter the pipeline.
So talk to me about how it works, how you came up with this idea.
You bet. So I actually started this journey about a year ago, and I realized we at Treehouse were having trouble hiring underrepresented people of color and women, and I, as a white male CEO with a computer science degree, couldn't figure it out. So I started talking to friends, people I trust that were people of color and women, and asked, what do we do? And they said, you have to partner with somebody we trust. So we went to the Boys and Girls Club, and they communicated that message that, yes, there is a job for you, you can get it, companies need you and want to invest in you. And they successfully recruited folks into the pipeline. And then we put them into our online part-time boot camp at Treehouse. It's a 9-month journey. And then at the end of that, they come out ready as apprentices, ready to be hired by tech companies. But they have to be supported with mentorship and with a lot of support so that they are successful once they're inside that organization. Because as you know all too well, it's going to be mostly white males in that organization, and they need a lot of support to succeed. So we created Talent Path to put all those pieces together to plug into companies.
Now, I know Amazon is one of your customers. Nike is one of your customers using your new Talent Path system. I'm curious, when you go into the Boys and Girls Club, what you hear from some of these potential candidates. You know, what do they tell you about why they either can't get a foot in the door or don't apply in the first place?
So there is no one that looks like them in the tech industry. So they don't even know it's possible. So one of our apprentices, her name is Abby. Her parents are Mexican. They've never made more than $45,000 ever. They've not gone to college. They're not in tech. So she didn't even know she could get a job in tech. No one told her that. And so the Boys and Girls Club can communicate that message, and she's able to believe it because it's coming from someone she trusts. And that is so important. So she's going to get a job as an apprentice at Envision, which is one of our partnership companies. And then she is going to then be able to recruit her family, her friends. She's already recruited her sister to be in the program. It's so exciting.
So, building a diverse engineering pool is a start. But, a lot of people say we need more people of diversity in leadership positions. As you mentioned earlier, you're a white guy like most of the people employed in this industry, but then it becomes this sort of impossible catch-22. How do you respond to that?
So we have to start first by opening the pathway so folks can get those jobs, number one, and we're doing that. But then secondly, they need to be mentored and supported, and they also need to have someone who will fight for them inside the company. So we're actually training the company on how to be inclusive and supportive for those apprentices. And we're also teaching the apprentices how to find someone who is their advocate in the company who will then talk about that person in those meetings. If you're hiring for a manager, you need an advocate higher up in the company to say, hey, what about Abby? I know she's high quality. Let's put her name on the list. So we're going to specifically focus on that. And then they will start mentoring people down below them as they advance up the program. And I believe it's a long-term solution, but it is a real solution.
All right. Treehouse CEO Ryan Carson. Ryan, thank you so much for stopping by.
Thank you very much.
Coming up, a Bloomberg scoop. Alibaba edging out other investors to be the sole owner of delivery startup Aluma. We'll head live to Hong Kong next. I'll get it right in the next block. This is Bloomberg. eBay is close to a deal to buy the Japanese assets of e-commerce site Q10. Bloomberg has learned that the $700 million deal would see eBay buy assets from its joint venture partner, Geosys. Q10's biggest market is in Japan. The deal would bolster eBay's position in Northeast Asia, where it bought South Korean online retailer Gmarket for $1.2 billion in 2009. In China, Alibaba is ramping up the competition with Tencent over food delivery. According to a person familiar with the matter, Alibaba has agreed to buy the shares of startup Aluma it doesn't already own from investors like Baidu. The e-commerce giant already had a 23% stake in the company. It was Aluma that was valued at up to $6 billion last year. For more, I want to bring in our Lulu Chen, our Bloomberg News reporter in Hong Kong. So, Lulu, what can you tell us?
So Alibaba buying into Aluma is really about buying that last mile delivery network. Aluma is already China's largest food delivery platform, and an acquisition would give Alibaba instant access to nearly 50% of the market. Apart from that, this also benefits their new retail strategy. The company does have grocery store lines right now. They are promising to deliver groceries within 30 minutes within the 3-kilometer radius. And then also they have their own Kobe business, which operates a similar kind of neighborhood services. So the acquisition would help them consolidate the businesses and really streamline the resources.
So how does this impact other players in the market?
Sure. Right now, it's really breakneck competition between Alibaba and Tencent-backed Meituan. Meituan is emerging to become this super behemoth, like a super app, just like WeChat. And it's set to be valued around $30 billion already. And that company already, right now, they're also occupying about 40% of the market share, even though in the last quarter, Alibaba, if this deal go through, Alibaba's Aluma has the upper hand. They still need to put in a great deal amount of money. It is a cash-burning business, and so right now, taking the company, having an acquisition over Aluma would really help them consolidate that business and help them in the competition with Meituan.
So how do you see the broader, Chinese e-commerce market then playing out?
Right. In this space, remember that Baidu at one point also wanted to join, but right now, as you can see, between the BAT companies, it's just Alibaba and Tencent ultimately. So Baidu will be fading out of this space. They will be focusing on artificial intelligence and their search business, which is their core business, and going into the neighborhood and offline retail business. It's a cash-burning business. It drags down on margin, and it seems as of now, only Alibaba and Tencent has the long-term cash to play out this war.
All right, Lulu Chen for us there in Hong Kong, talking about last mile delivery. Thanks so much, Lulu. And that does it for this edition of Bloomberg Technology. A reminder, we're live streaming on Twitter. Check us out at Technology weekdays, 5 p.m. in New York, 2 p.m. in San Francisco. That's all for now. This is Bloomberg.